So what do we offer? So basically we can, in simple terms, we can divide our products and services to two main areas, which is our trading and our financing. So our trading have the e-direct cash upfront, the collateralized trading, and the foreign investing service. Under our financing, we have our discretionary financing and our share margin financing. So I'll explain briefly all these products and services that we have here. So first off, our e-direct cash upfront. So you can see our terms for this product: online brokerage rate of 0.05%, minimum 8 ringgit, trading limit of 99% of your cash, and a trust interest of 1.25% per annum on daily rest. So why would you want to choose to open this product? It's to obviously, since with a low brokerage, you can minimize your cost of trade, and then that will lead to a lower break-even price. You can easily take profit by even with one bid. So this account is very suitable for beginners, and because of the limit on the trading limit, it prevents you from over trading because it enforces the discipline. So next is our collateralized trading. Some people refer to this as the contra account or the T2 account. So the standard rates for our company is 0.4% below 100K in trading value, 0.2% for above 100K, minimum of 28 ringgit. Then for the trading limit, here you'll get 3 times your cash and 2 times the shares in cap value. What this means is that for every individual share that you pledge as collateral, there is a capping rate. So depending on what shares you put in, then they will give you 2 times the limit. Settlement is as per Bursa rules, T+2, and a trust interest for this account is 1.7% per annum. So basically what this account allows you to do is to use leverage. Basically you put in a certain amount of money, you can trade up to 3 times that amount. Or if you want, you can whatever shares you're holding as free shares, then you can use that to trade as well. So you can use that to contra trade without needing to put any additional cash up front. So contra trade means you trade and then you sell it off before the settlement date, which is the T+2. So this is more suitable for experienced traders. So next is our foreign investing service. So with this, if you subscribe for this service, you'll be able to trade up to 12 foreign exchanges as listed here. So this is a separate platform to our local trading. So FIS allows you to diversify your portfolio. So you can have different exposure to the different markets instead of having all your eggs in one basket, just to the local market. And then with this, if you subscribe for this service, you do not need to open an additional trading account. It just tags on to your existing trading account. You can apply this for the e-direct or the collateralized trading also. You can subscribe for this service. Then the settlement of the contract is all done in ringgit, so the conversion is automatically done, so you don't have to worry about depositing any foreign currency or anything like that. Okay, so we go to our financing products now. So the first one is discretionary financing, DF. This is short-term financing, only for the collateralized account. So what this does is it extends your T+2 settlement date to T+7. So it gives you the extra 5 days. So we will charge the interest of 8% per annum only from T+4 onwards. Then depending on how much cash or shares you have inside the account, free shares, then you can finance up to 70% of the collateral. So why would people want to opt for DF? Basically, it's to provide flexibility for mainly for contract traders. So if like T+2, sometimes for selling is on T+3. So if it's too short, sometimes like the price hasn't started to move, then they can choose for this product where you just the interest charge of 8% is actually cheaper than if you roll over the contract. Rollover means you sell on T+2, T+3, and then you buy back the contract. That's a rollover. So that if you do that, you will be charged brokerage on two sides. So instead of doing that, you can just opt for this DF and just incur the interest fee. Next is the share margin financing. This one is a bit technical. So our standard terms for this minimum facility limit, you must apply for 50,000 ringgit, interest rate of 5% per annum. There's some rollover fees, 0.25% per quarter on outstanding purchases. Margin of finance is 50%, meaning whatever collateral you pledge can be your cash or your shares. You will finance 50%. You can use that to purchase additional shares. Then maintenance margin is basically the margin call. So 60% if it breaches, you see the 60% is actually the margin ratio. So to calculate the margin ratio is the outstanding amount that you owe over the collateral value of your shares. So if it breaches, then there will be a margin call. Margin call, then you have to top up money. Obviously, with this, there's no. So why share margin financing? It offers you leverage similar to collateralized and DF also, but it also offers flexibility, even more flexibility than the DF, because there is no need to worry about the settlement. When you trade, you can choose to buy or sell whenever you want. There is no money installments needed to. Even though you're taking a facility, what it is, you just have to maintain the ratio within the maintenance margin. And then only applicable for SMF, you can use this product for the dividend stocks strategy. You can use the margin product to accumulate dividend stocks, which pay good dividend, and you can use the dividend to offset the interest that you pay for the margin. That's what some people use this SMF for. So if you are one of our clients now, you will gain access to our daily market overview and our stock picks, the stocks on radar. This is shared in our Telegram channel. You also have access to our research reports. So this covers individual companies, sector updates, economy updates. We have market outlook sessions, usually held quarterly. But because of the pandemic recently, I think the last one was quite recent. But we will look to hold more of this market outlook as well. Handholding sessions to teach you how to use the online trading platform. We have this quite regularly as well. So if you have any issues, any further inquiries about our products and anything you want to ask, just drop us an email, sales-ebis@mbrandgroup.com. My contact is there as well as my team of dealers. We'll be more than happy to help you with anything. Technical issues with the platform, you can always call our help desk, and the help desk email is there as well. Okay, I think that's all for me.
Thank you, Ian. Thank you.
Thank you. Back to you, Jeff.
One simple question for you. For cash upfront interest of 1.25%, is it net or still subject to admin charge of 25 basis point?
The 1.25% is net. So the admin charge actually is, I wouldn't call it admin charge. It's more like an adjustment. Basically, if you see your statement, you will see the total interest that is paid out, which is actually the money market rate, which is like it should be higher, like 1.9. Then you minus off the 0.75 to get the 1.25. So what you get is actually the net 1.25%.
Okay, thank you. Let's see. Okay, hey guys, if you have more questions, please email to us and drop us or any question on the chat. Yeah. Okay. For our next speaker is David Paul. Mr. David is the founder or managing director of Spiral Thinker Group. So why did the company called Spiral Thinker Group and how it began? I will leave it to the best man to explain. The mic is yours, David.
Thank you, Jeff. Thank you very much. All right, let me share my screen first. Can you guys hear me properly? Jeff?
Yes, loud and clear.
Okay, cool. Now let me share my screen. So, all right, now hopefully you can see my first slide. Investing is more than just stock picking. Now, good evening, everyone. Thanks again to Jeff as well as the team at M Equities and Investment Bank for inviting me and my team to appear on their platform for the first time to talk about how to invest in stock. So I won't bore you with why we call ourselves Spiral Thinker. That is a story for another day. But there's a story behind this. Is why we've come to this workshop is because Jeff was asking, hey, am I still giving talks? Say, yeah, and since I was trying to crack my head to because we have never spoke on an investment workshop before. So instead of going through the run-of-the-mill value investing, or fundamental analysis, I thought maybe we should be talking about something more interesting and which is very practical, which is in everyone's mind. Yeah, and to cut it short, a lot of people think that investing is just stock picking. Actually, it's much more than that. And I hope that by listening to me for the next hour, you get some insights. Yeah. So I hope you guys have taken your dinner, grab a cup of coffee if you do not have, or your favorite drink. I hope you enjoy my talk. And if you have any questions, you can type it on, or maybe Jeff will unmute, will invite you to chat with me one-on-one, right? Which I prefer. Okay. First of all, before I continue, a big disclaimer. All right. Basically, I'm just saying that because I'm not licensed to give advice, so whatever I'm sharing tonight on this platform is purely based on my own experience as well as my opinion. The organizers as well as myself do not accept any liability. And if you decide to invest, right, there are a team of professional dealers, analysts, fund managers at M Bank at M Equity. So feel free to contact them should you want to take action. Yeah. Okay. So again, before I start with the topic, just give me a couple of seconds to talk to you about who we are. We call ourselves the Spiral Thinker Group. So education is a small part of our business. Education is something like what I'm doing today, right? A bulk of our operations actually is in research. We do a lot of research in Malaysian equities as well as overseas. All right. Other business units include consultation, right, especially for portfolio clients, as well as some special projects under the Sigma business unit. Yeah. So that's all you need to know. Later on, I'll share with you our email as well as our Facebook towards the end of the sharing, so that you can hook us up if you like to. Yeah. Okay. Now, back to the topic for tonight. Investing is more than just stock picking. Actually, I used to be an engineer, right? So, engineers, we like to take things apart as well as put them back. So actually, I gave a lot of thought about this topic as well. Now, this topic may seem simple, but there are actually a couple of components in this title, right? So I highlight in different colors for you. First of all, is investing. So we're going to spend a couple of minutes to talk about what is actually investing, right? You may think you know, but the answer could be entirely different from what you think you know. Then what stock picking, right? Then last but not least, what do I mean by investing is more than just stock picking, right? So without much further ado, let's start off with the first topic, investing. Now, what is investing? What makes an investor? Okay, so I'm going to bore you a little bit by going down the memory lane to introduce this gentleman called Benjamin Graham and David Dodd. Both of these gentlemen wrote a book called Security Analysis all the way back in 1934. None of us have been born yet, right? Right. So to cut it short, in this very thick textbook, right, Mr. Benjamin Graham, who is also dubbed the father of value investing, he said that he defined investment as an operation in which, upon thorough analysis, all right, promises a safety of principle and a satisfactory return. All right, so he defined investment into three components. One is you must do your proper homework. You must go through thorough analysis of the asset or the stocks that you're buying. And not only that, what you should buy at the price that should give you a certain, a safety on principle, meaning a margin of safety on your capital invested. And last but not least, he's talked about return as well. So this is what most of the people call risk and reward, right? Risk and reward ratio. So this is what he meant by investing. And think about it. Think of the last stock that you clicked buy recently, whether it's this week, this or last week, right? As you know, the market has been quite interesting in the past couple of days, isn't it? So think about the last stock you bought. Did you, before you bought the stock, before you click the buy button, right? Have you gone through these three steps? If not, according to Mr. Benjamin Graham in the same book, he said that he opined that operations that do not meet any of these requirements are deemed to be speculative. Okay, now that is what Mr. Benjamin Graham how he defined all right, investment. Don't worry, I personally prefer the other definition by Mr. Warren Buffett. Interestingly, Mr. Warren Buffett was a student of Mr. Graham. So Mr. Buffett, in his 2011 Berkshire Hathaway letters to his shareholders, he said that investing is simply a transfer of the current purchasing power with the expectation of receiving more purchasing power in the future. Okay, now in layman's words, what does he mean? What did he mean? All right. Basically, we know that we know what is inflation, right? So money you have today, although 10 years later, if it's still the same face value, it may not, you may not be able to purchase or buy the same amount of goods and services using with the same dollar amount sometime in the future, isn't it? And that is the erosion of inflation on our our purchasing power. So Mr. Warren Buffett said that if investing is really about capping, is really about overcoming this erosion, this inflationary erosion of your purchasing power. So anything beyond that is basically bonus, right? So, well, although it may sound like a very boring definition, but it is very true, and I hope that if you say that you're investing, I hope that you keep this in mind, right? Now, don't get me wrong. There's nothing wrong to be a speculator, all right? Because without speculating, life can be very boring, isn't it? So other than going to Genting to play the games, so some people, because speculating in stock market is so easy, just download the app, open an account with equities, then you can just buy and sell, can speculate, hearsay, so on and so forth, isn't it? But know what you're doing, because it makes a difference. Your objectives will be different. If you're not sure about which one you are doing, you may lose money over the long term. Okay, so know the distinction between investing and speculating, but whether you are using fundamental analysis, technical analysis, or any sort of analysis is beside the point. Those are the approaches that you use to whether to speculate or to invest. In fact, I can also use fundamental analysis to speculate, right? But know the distinction or the difference between these so that you can set your objective correctly. Okay. Worst case scenario is you find yourself, initially you wanted to speculate, but you became a long-term investor in the end, and that is something that all of us want to avoid, isn't it? Okay, so again, our version of why we need to invest, right, is really we believe that investing is partaking in the economic growth of the market. Okay, in layman's term, because when you buy a stock, it's not just a number, it's not just a certificate. In fact, you are buying a piece of an underlying business that is represented by the stock. Okay, for example, if you buy Maybank stock, you buy M-Bank stock, you are partaking in the business growth of these companies, right? So, and with that regard, if you agree with me, and if you agree with Mr. Benjamin Graham, right? So he believes, and we also truly believe that investment is most intelligent when it is most business-like. Which means that when you analyze a stock, right, when you do stock picking, when you invest, right, you need to know that you are investing in the business. You're not just investing in a stock code. You're not just investing in a name, right? You're investing in a business that is providing goods and services to the population in that particular country or in that particular market. And some businesses, they have products and services all over the world. Case in point, companies like Apple, companies like Microsoft, even Malaysian companies. We have a lot of companies that export to the whole world, right? So really, investing is really partaking in the growth of the economy. Okay, so with that said, I put that aside. This is just some couple of boring definition for you to digest. Now, so what is the approach to investing? Okay, so I promise you this is not a plain vanilla kind of fundamental analysis workshop. I would like to share with you our practical approach to investing. Okay, now the way we do stock pick as a first step, we don't use screeners. We don't go to the screen and say, hey, what to invest today. In fact, it is a very long and detailed thought process before we even decide what to buy, before we even click the buy button. Okay, now how we structure our thought process is actually visualized in this slide in front of you. Our thought process starts with the top-down analysis, then followed by the bottom-up stock picking. Now, what do we mean by that? Okay, we usually start by looking at the big picture. Okay, big picture includes, we have to consider what is the macro broad economic factors. All right, for example, what is the big trend now? All right, is it oil and gas? Is it plantation? Or is it something more interesting, exciting like technology, semiconductors? All right, or banks, or finance, right? So we need to look at this from a broader sense. For example, the COVID pandemic, well, it devastated every single one across the world, but it also brought a lot of, once in a lifetime opportunities, which we have never seen before. At least for me, I have never experienced such a interesting market reaction during 2020, right? So when we look top down, we look at the economy. For example, Malaysia, we know that Malaysia is involved in oil and gas, electronics, palm oil, so on and so forth. So we can use that knowledge to leverage to decide what we want to invest. Okay, so for us, we seek industries that are performing well or are in the uptrend. When I say uptrend, I'm not talking about price. I'm talking about the outlook of that particular industry or sector. All right. And after we determine on the top-down level what industry or sectors to invest in, normally on the bottom-up process, what we do is we either pick the best-in-class business that is involved in that particular industry, or we choose the market leaders. Now, I'll give you an example. Back last year in 2020, when the pandemic was at its peak, when everyone was shouting the end of the world when all we do every single day when we wake up is to see the number of cases, right? So one of our investment thesis is to look at healthcare, especially growth stocks. So in that regard, we prefer to look at for those with the biggest market share, with the most profitable glove companies, or with the most innovative company, right? So this is how we do a bottom up. Now, there are a lot of talks and courses out there to teach you or to share with you how to pick the companies based on the financial figures, based on ratios, based on all sorts of quantitative figures, right? It's not, well, all those are important. Those you need to learn on your own, but it is not the, I would say, it is not the focus of my talk tonight. So tonight, I would like to give you a framework of your thought process so that you can take it back and see how you can apply it in your own investment journey. Okay, so basically, in a nutshell, there is our top-down and bottom-up thought process when it comes to investing. And as I mentioned, so let's start with top-down first. What kind of industries that we can invest in, right? So now, if you are like me, personally, I'm 100%. I would say 80% invested in Malaysia. So normally in the stock picking process, I will look at what are the right industries that I can invest in Malaysia. Now, when I say right industries, it doesn't mean that this right industry is actually a very personal choice, because, for example, I come from an electronics engineering background. I majored in telecommunications. So naturally, when I started investing, I tend to look at telecommunication stocks. I tend to look at electronics companies, right? But if you are not from an engineering background, especially electronics, right, these industries may sound very foreign to you. You may not understand what is going on. You may not understand the nomenclature, the names, or the technical terms of this business that are involved in the industry, right? But it doesn't matter. What is good for me, what is right for me, may not necessarily be right for you. This is what we call COC. COC stands for Circle of Competency. There are a lot of industries in Malaysia. Now, when people tell me there are nothing good to invest in Malaysia, I always scratch my head. I don't understand. In fact, Malaysia is full of opportunities, right? This, despite all the bad news, in politics, or how bad our currency is doing, all that aside, right, we have a lot of wonderful companies as well as industries to invest in: energy, telecommunications, petrochemicals, manufacturing, automotive, you name it, right? So, but for us as Spiral Thinker, because of the DNA of our team as well as my background, our COC, or focus, so to say, is actually lying in electronics, semiconductor, as well as emerging technologies. So this is something that is very close to us. We opine, or we believe, that semiconductor and technology is an evergreen industry to invest. Now, that said, it doesn't mean that it's only good for buy and hold. All right. Now, for those of you who are quite, I would say, seasoned in this in investing, you will know that electronics or semiconductor can be a very cyclical sector to invest in. Because they can be sensitive to geopolitics, they can be sensitive to economic growth, sensitive to interest rates, so on and so forth. So these macro or external factors do impact the way we look at these companies, especially the valuations. But the bottom line is, because of our COC, we tend to like electronics as well as the semiconductor industry. Okay, but I will share with you the real reason later, after the next couple of slides, right? But coming back to our investing process, after top down, then we do bottom up, isn't it? Now, what do we look for in bottom up? Okay, now a lot of people, I'm sure you have read books, I'm sure you listen to webinars these days to talk about how to read financial statements. Now, that is the most basic tool or skill that you need to have. Don't worry, you do not need to be an accountant or a financial analyst to understand these numbers, right? So one of the biggest misconception I had last time, before I went full-time investing, remember I was a telco engineer for 10 years, is that I thought that financial statement analysis is so tough. In fact, the problem is actually with ourselves, right? We always think that we always put the barrier so high that it stops us from actually trying it out, right? But I can tell you from personal experience, right, that reading financial statement is the most, I would say, the easiest process or the easiest part of stock picking. Okay, but to put it in a more practical angle, right? Financial figures, or the value, so to speak, is not the most important thing that we look for when we pick our companies to invest in. In fact, we focus more on the top part of this pie, which is we focus more on the quality aspects. Now, what are the quality aspects? Quality aspects include the business model, the market penetration of the business, the management caliber, integrity, right? So these are some of the elements that we look for, the qualitative elements that we look for in a business. Because we believe that at the end of the day, right, it is these qualities that the business has, that the management has, that drives the value of the business moving forward. And the value of the business can be quantified in the financial statements, for example, the income statement that measures the performance of the business, all right, or the balance sheet that measures or that depicts the strength, whether they are highly leveraged, they have enough cash, how they manage their cash flows, so on and so forth. And last but not least, of course, the efficiency in terms of how they manage the cash inflow and outflow of the business. All right. So to put it in other words, we look at we look at the qualitative aspects of the business more than the I would say the quantitative aspects of the business, because we believe that we believe that any business, right? If there's any businessman out there tonight listening to this talk, right? I'm sure you know what I mean. Ups and downs is just part and parcel, right? Economic up and downs is just part and parcel of running a business. Not every day is a Sunday, and sometimes things just happen which is out of our control. For example, like the pandemic, like geopolitics, China and US can be engaged on a fight with each other, and all of us staying on the sideline will get affected, right? So sometimes it can be helped, but what differentiates a good and bad company is really in the quality of the business. So we can gauge it through the business model, through the what kind of market that they operate in, how they or the total addressable market, right? As well as how strong is the management. Especially, we prefer to invest in companies with very strong management, especially when the founders have a very long-term vision. They have a good succession planning, and most importantly, they must be transparent and they must possess high integrity. All right, because without this, whatever they report in the numbers to us is basically just questionable. Okay, so this is what I'm going to talk about tonight in this regard. There are a lot of books out there, there are a lot of webinars, there are a lot of resources out there for you to to take up skills on how to read financial statements. But don't forget that when you're doing it right, remember the big picture. The big picture is investing in a good business. So coming back to what I said just now, right? Before I talk to why we focus a lot on electronics, right? Let's come back to the title again. Investing is more than stock picking. Now, a lot of you, think that a lot of market participants think that stock pick is the only thing that they need to care about. But in Spiral Thinker, or at least myself, I beg to differ. In fact, stock picking to me is roughly about 1/3 of the story only, right? It is not the it is an end, it is a means to an end, but it is not the entire story. After stock pick, there are a lot of processes that you have to follow through, right? Like your strategy, how you do your allocation, how you execute your strategy, and that is very important. All right. Then, of course, how you manage or how you optimize your risk to reward ratio of your investment, of your allocation is also very important. Now, what do I mean by that? After after you do your homework, right? Okay. So you decided to invest in stock A, B, and C, right? So how do you determine how much you put in A, B, and C, right? And that also depends on how much you understand on the business. You got to strategize your portfolio execution. You got to know how to allocate your capital, because I don't know about you, but I have limited capital. All right, although I wish that my capital is unlimited, but reality is we all have limited capital, so we need to know how to allocate our capital properly in our portfolio, right? And last but not and then after the planning stage, we need to have a system to be able to execute it. Now, after executing, along the way, stock goes up, some stocks comes down, right? How do we determine what actions to take? Whether should we add more, we should sell, or we should cut loss, right? So that really depends on the risk to reward management of your allocation or of your portfolio. Okay, so these are some of the things that full-time investors like myself, we worry or we are concerned with day in, day out. Okay, but there is one particular thing or one particular element which I feel a lot of investors or market participants neglect, which is emotion management or behavioral risk management. Now, you can score 100%, you can be the best stock picker, you can be the best strategist, you can be the best allocator, you can be the best portfolio executor, all right? But if you do not manage your emotion or your behavior risk well when it comes to investing, right, that could really make or break your investment journey. Take it from myself. I've been investing more than 10 years. I started with tactical analysis, right? Yeah, you make a lot of money, right? But what happens when the market turns, right? And then and when emotions are high? Like, for example, last Friday when the WHO declared this Omicron as the variant of concern, look at what happened to the market, right? In fact, if you really look beyond the smoke screen and really look, at what the Omicron variant is, I'm not downplaying this variant, but yes, the transmission or the infection rate of this Omicron variant is very high, but we have yet to ascertain the fatality or the mortality rate of which is caused by this variant. But the market was already reacting to this news, right? So one day down, the other day up. Then when the Moderna CEO came out to say, "Oh, the vaccines cannot work," market came down. Today, when the BioNTech CEO say, "Hey, it's highly transmissive, but it's not as destructive," then the markets went up again, right? So this market sentiments will really have a big impact on your emotion. So in order to be a rounded and in order to be successful in investing, right, you need to know how to manage these emotions well. You can use a system or you can use tools to help you overcome emotional behavioral risk. For myself, one of the tools that I use, and I'm sure that M Equities have this feature in the trading, is this thing called good till date. Now, what good till date means? What means? After I decided what stock to buy, I decided on the allocation. Now, allocation means what? Allocations mean you decide to put aside a certain amount of money to invest in one particular stock. But it does not mean that you want to use up all your allocation in one shot, isn't it? Because you never know after you buy. I don't know about you, but my experience is every time I buy, the stock price sure will come down after that. Do you have this kind of experience? I mean, skills as I have, I'm sure a lot of us share the same sentiment, isn't it? So having this in mind, right, what I would do in order to manage my risk well on the right-hand side, right, is I won't spend everything in one shot. For example, if I allocate, say, 30,000 to buy stock A at $1, all right, I won't spend all 30,000. I'll split it to 10,000, 10,000, three trades. All right, I may buy after a certain price lower than my first buy-in price, or vice versa. Okay, so and when I do that, I just key in my trades. I set it to good to date for maybe good for 30 days, good for 60 days, 90 days, depending on what your broker gives you. And with this feature or with this tool, I do not need to watch the market every single day. Now, trust me, all right, all of us human beings are emotional beings, right? So trust me when I say that if you if you focus long enough on the trading screen, I can guarantee you that you take action when you are emotional. Okay, and you know what the wise man says, right? When your emotion is high, right, you should avoid from taking drastic actions. Okay, and that applies to stock market as well. So the importance of these different actions is that, on the left, from stock picking to strategy and allocation planning, is where your research, your analysis, or your follow-up of the companies that you invest in play a very important role. But after that, after the stock pick, after you allocate, after you execute, right, how you manage your portfolio is will come into play more than your stock pick already. Okay, and this is where you need to do, maybe you need to do some rebalancing of your portfolio. You may even need to restructure your entire portfolio based on risk to reward. Let me give you an example, right? Never mind. I have a very good example later on towards in the next couple of slides on how we navigate the pandemic since 2020. Okay, so let's leave it for that. So make sure you stay until the end. Yeah, I've got about 20 minutes left, so I'll try to stick within the allocated time. Okay, now, so let's put everything that I've said just now in the past 30 minutes into practice. Now, whatever I shared moving forward is not theory. You won't be able to find it in any textbook or in any written article. It's really based on, because we are full-time investors, so whatever I'm sharing with you are really what we are doing. And just now I talk about, our focus or our COC, right, is in technology or semiconductor. There's a reason for it. Okay. Now, as you can see, this is a very simplified value or supply chain by the Semiconductor Industry Association, or SIA, which is based in US. So this chart, this graph could be a little bit biased. Okay. Now, as you can see here, how the semiconductor value chain starts is actually, it starts with research and development, right? R&D. Now, of course, not all R&D are coming from US. A lot of R&Ds are also from Europe or from China, from Taiwan, or even Japan. Okay, but a lot of the technologies that we enjoy today, yes, I agree, they came from US. So after the R&D stage, which is non-commercial, they decided to commercialize certain technologies and products, right? You need to look for raw materials, and a lot of the semiconductor raw materials come from China as well as Japan, right? After when you need to manufacture the silicon for the wafers, which will be made into the chips, right? Or the integrated circuits. Now, after the silicon wafer, then they will go back. Of course, now, actually, US before Biden, during the Trump's presidency and before, right? Actually, US do not really produce a lot of wafers. In fact, most of the wafers today that we know of are produced in Taiwan, as well as other companies around the world, especially in Asia, by companies like TSMC, Global Foundries, even Silterra, right? We've got a homegrown wafer fab producer in Malaysia, and I don't know about you, but I'm very, very proud of it. Okay, then to cut the story short, after these wafers are being manufactured, there will be further slice and dice to produce the chips that we know today that is being assembled into our devices like smartphones, our laptops, and so on, right? And in that regard, this part of the world, Southeast Asia, especially Malaysia, Singapore, Korea, Taiwan, right? We are very much involved in the final testing. We are very much involved in the assembly, as well as packaging of these semiconductor chips or semiconductor materials. Okay. Then, of course, the biggest assembler in the world is basically mostly housed in China. The iPhone that you are using, chances are they are being assembled in Taiwan or China, depending on which plant you're looking at. If you're using a Samsung, high chance that they're assembled in Vietnam, so on and so forth. So, Southeast Asia is a very important region when it comes to the global supply chain or global value chain of the semiconductors. Malaysia especially, in fact, you may not know this, but Malaysia is a very important semiconductor player, all right, in the global map. In fact, if you look at this OECD extract, the data from OECD, this shows the Malaysian total exports based on percentage back in 2019. You may ask, hey David, this is very old data, but it should more or less be the same today. today, even, you know. In fact, if you see here the blue boxes here, right, which consists of electrical machineries and equipment, as well as machinery and appliances, these are things related to electronics, semiconductor, as well as the other peripherals, right? So this made close to 50% of our total exports in 2019. Now, for those of you who just know this for the first time tonight, I give you a couple of seconds to digest this. I repeat, Malaysian total exports back in 2019, and which is still true today, is around 50%. I can say easily more than 40%. A lot of us thought or may think that Malaysia major product export is oil and gas. It is not wrong. We used to have that, but since the Mahathir administration last time, that when he decided to push manufacturing, right, in as a major economic activity, right, that is how we've arrived until today. Then we have to thank to Mr. Mahathir, right, for initiating this cycle, isn't it? So and of this 40, close to 50% figure, about 13% is in the form of integrated circuits. Integrated circuits is a form of chip, right? So there are many forms and modules of integrated circuits. And in the global arena, Malaysia, all right, contributes 10% of the global integrated circuit exports in 2019. All right, we are ranked number 4 after China. After Taiwan, China mainland, South Korea, and Malaysia. In fact, we export more integrated circuits than Singapore back in 2019. I'm not sure whether it's still true today, but we should be more or less about 10% plus minus 1 or 2% in 2021. Okay, so this shows you how important this is. Now, do you understand why? Because I personally, we are almost of our investments for myself, more than 80% of my capital is investing in Malaysian equities, right? So in that regard, and coupled with my background as an engineer, right, that's why this technology as well as semiconductor is our main focus of our investment. But that doesn't mean that we don't look at other industries. We do as well for the purpose of diversification. Okay, so our focus theme or thematic approach has always been on technology. Now, when we talk about technology, there are so many types of technology, right? The word is very wide. We could mean OSAT or outsourced semiconductor testing and assembly, right? We could talk about ATE or these automated test equipment manufacturers. We could be talking about EMS, electronics manufacturing services provider, ODMs, original design manufacturers, so on and so forth, right? But we lump it all together and we call it technology. So this is the 5-year roadmap of what we have been investing since 2017. As you can see, our core focus has always been in technology, except for a very special year in 2020. Because, like I mentioned earlier on, because of the golden opportunity brought on by the pandemic, all right, we decided to switch our core allocations to glove stocks instead for that particular year, all right? Now, you may be wondering, hey, David, how come some boxes are green and some are actually red? Okay, now, because of our approach to investing, whereby we do top-down analysis and we tend to be more focused on a thematic theme, right? And this theme is technology. So sometimes we cannot, our investment will be affected by external or macro factors that we do not have control. Give you an example. Back in 2018 and 2019, we suffered two very, very painful years. If you remember well, this was when Mr. Donald Trump was the president of US, and he engaged in a head-on trade war with China, which ballooned into a technology war. Or you can say it is a technology war that led to trade war, vice versa, potato, tomato, right? Doesn't matter. But what is important is the technology or the semiconductor industry really suffered a huge setback for that 2 years. So the drawback or the disadvantage of using our approach is sometimes you may get you may find this situation, but as long as you invest in good quality companies, right, chances are the business will pick up again, the cycle will come back up again, right, and that's where you can even make more times than what you've lost previously. Okay, so other than the core industry that we invested in, we also diversify into other industries or companies like aviation, the aviation related companies in Malaysia. We've always been invested in healthcare, particular gloves, even before, way before the pandemic, because as I said, when we invest in companies or industry, we tend to look for the biggest player or the best in class. And I'm not sure if you know this, before the pandemic, right? In fact, Malaysia is the largest glove producer in the world. And this is before, new players pop up during the pandemic, especially from Thailand and China, right? Okay, so Malaysia, I'm very proud that Malaysia is the biggest glove producer, even a major glove producer today. Okay, so we also invested in CPO plantation, not very successful. We also invested in shipping, lost money, FMCG. We lost a lot of money in aviation stocks in 2020 because of the pandemic, but luckily it was neutralized by our investment in gloves as well as technology stocks, which actually pull our performance up. And in fact, 2020 became one of our best performance years, right, in our investing experience. In 2021, because of the acceleration of digital transformation due to the pandemic, we decided to double down on the allocation in technology stocks, especially those related to 5G, as well as consumer electronics. We dabbled a little bit in recovery stocks, although it's not very successful because, there are new every once a couple of months there'll be new variants coming out, right? New scares related to COVID. We invested in commodities as well as petrochemicals, which is actually a proxy to the recovery. Commodities is because of inflation. Okay, so this is how we approach our portfolio allocation. When I say core, it could be anything between 40% or to 60% of our allocation in our entire portfolio. So this was what we have done so far in 2021. Okay, so as I mentioned because of this because of this kind of approach to investing, focusing on themes of these industries, right? Sometimes you may have good years, sometimes you may have bad years, but don't forget, investing is for the long term. All right. Sometimes you may get 1 or 2 years of setback, but that's normal, isn't it? That's normal. Okay. The good thing about being investor is if you don't like the company, you can sell the stocks and choose another company. Compared to the business owners, they have nowhere to run, right? Just imagine if you're Tony Fernandez, right? And the pandemic hit you, right? And all your planes are grounded. You have no choice. You cannot say, oh, no, I gave up on airline. You can't, because that is the business that he's running. But for investors, we are lucky because we can sell the stocks, we can sell the group of stocks that we don't like and focus on other companies that are profitable. Okay, so know what is in your head. Know the big question, right? So let me tackle your question first. So what is our outlook in 2022? Without going into too much details, we will still very much be focusing on technology, but we will be very selective. We don't go broad-based semiconductor, but we will be focusing more on electronic vehicles or the electrification of vehicles. Autonomous vehicle, I think it will take some time. It won't happen so soon. But I think we should believe that autonomous vehicle should gain traction in the next 3 to 5 years. Other than the electric vehicles, we also focus on automation, robotics, in the IR, Industrial Revolution 4.0 theme. We will still be very much into healthcare, not necessarily gloves. We may look at other aspects of healthcare, especially semiconductors that are involved in the healthcare sector, and that is a growing trend in our opinion. Now, other than this technology theme, we will be also looking at inflationary theme or beneficiaries of inflation. We'll be looking at some recovery sectors and like gaming or travel. Food security is a very huge topic that we are currently looking at. because of this pandemic, right? It really highlighted, accentuated the importance of having food security, especially now with so many these natural disasters happening, right? The ability for a country to ensure uninterrupted food supply, right, will become a very monument national agenda. Okay, because of the strong USD, we have always focused on exporters, so we are continuing to do that, and we will be also maybe following a little bit of the geopolitical development, especially between US and China, because we believe that this theme could give rise to a lot of opportunity, especially our EMS or our APE companies that will benefit from this US for US and China for China policies. All right, when these two economic giants are head on competing with each other. Okay, so that's roughly the theme that we're looking at. It's not set in stone yet. So we still have 1 month to go for 2021. So we should be able to have a clearer picture sometime in the first or second month of 2022. Okay, and so I've got 3 more minutes to go. So in a nutshell, right, I know a lot of you, a lot of participants tonight, you feel fearful of what's happening in the market around us today. Don't worry, you're not alone. Me too. Okay, I'm also human. All right. A lot of my gains has actually been pared down because of the recent correction. But honestly speaking, I have not sold a single share. In fact, because before the market correction, most of our portfolios are having about 25 to 30% cash. So I'm in a good position, to do some shopping, especially when there are more cheap sales. I'm very happy. Okay, but I just want to end my presentation by quoting this wonderful phrase from John F. Kennedy, right? He says that the word crisis is composed of 2 characters. All right, in Chinese, it's called 危机. So 危 represents danger, 机 represents opportunity. So don't worry too much, right? Mark my words. In any crisis, right, whether it is a USD crisis, pandemic, geopolitics, US-China trade war, right, there are bound to be companies or there are bound to be sectors that benefit from the crisis. So all you need to do is put your ears on the ground, do your homework, all right? Look at the big picture, look for quality companies to invest in, right? You should be on the right track. And before you do that, before you click the buy button, right, make sure you know what you're doing, whether you are investing or speculating. Nothing wrong with any of these. Just be sure of what you are doing. Okay, so with that, I end my presentation. If you enjoy my session, my first session with mBank tonight, please maybe give a like on the chat. If you want to know more, you can write to us at alpha@spartatingo.com, or you can visit our Facebook at facebook.com/intelligenceinvesting. Okay, Jeff, that's all I have to share tonight.
Thank you, David. Hey, so anyone have any question for David?
Okay, let me unshare my screen because I need to look at the Q&A chat box. Okay. Oops, stop sharing.
Feel free to type in the chat box.
Okay, I'm not used to Microsoft. Let me see. Oh, show conversations. All right.
If anyone wants to chat or talk, feel free to raise your hand.
Yeah, don't be shy. I prefer to have a one-on-one talk with you. Well, it's just minute to 9 o'clock. I don't mind to have a conversation with you if you have any questions. Just don't ask me what stock to buy. I'm not licensed to do that. We have a question, I think.
Well, first question is, what are the current investing strategies?
Is this by Dr. Chan? I'm not sure what he meant by current investing strategies. Maybe just to recap what I shared. For myself personally, as well as our strategy in Spiral Thinker, we tend to do thematic investing by focusing on what are the trends, right? Now, when I say our core focus is in technology, because technology is so wide. If you talk about technologies about 3-4 years ago, I would say that our focus would be on LEDs, light emitting diodes, because the trend then was to replace a lot of the lighting modules that we are used to in consumer devices or even automotive into LEDs. So that would be the trend. But if you ask me in 2019, what would be the trend? I would say it's 5G. 2020, I think the trend would be these electric vehicles, especially energy storage systems, or in other words, battery management systems for electric vehicles, so on and so forth. So even in technology, it's so wide, right? There are a lot of smaller subsector to focus on. So I hope I answered Dr. Chan's question. Yeah. Yeah, Mike, you want to have a personal chat? By all means, please raise your hand. Okay, Sam has a question. How do you enter the stock once you have identified the focus area? Okay, never mind. Let me, Jeff, if you don't mind, let me share my screen again. Yeah.
Sure.
Okay, so to answer the question, how do we identify the stock? So let me share this. Okay. Now, let's say after we decided what is the trend or what is the sector that we want to invest in, right? As I mentioned earlier, normally we go for the best in class, meaning we go for the best companies that are the best performer in that particular industry, or we go for the biggest player, we go for the market leader. Now, let me give you an example. During the pandemic, right? Everybody is talking about glove stocks, and there are so many glove companies in Malaysia, right? Harta Lega, Top Glove, Supermax, Kosan, then the smaller players, and then there are so many new golf players popping out. So which one do we pick, right? So for us, we like market leaders. In that regard, we prefer Top Glove among the others that at that time, because Top Glove has the biggest market share among the other golf players. Although they are neck to neck to Harta Lega, we also prefer Harta Lega for their engineering efficiency. All right. So that's gloves. Now, in many years ago, when I started on, I invest in telecommunications. Invested in Timecom. I invested in DG because of their market leadership, because of the way the management run the business. Now, you may be asking, hey, David, don't you look at numbers? Yes, I do look at numbers, but I look at numbers to ascertain whether these companies have run the business well or efficiently historically, because numbers cannot tell you about the future, right? But how the management run the business can tell you, or you can gauge how they're going to perform in times of adversity or in times of high growth. Okay, so there, I believe that in any industry or any sectors at all, right, there are bound to be more than one player. Save for a couple of industries like the beer, this alcohol, it's a duopoly, or I think some other tobacco. I think now is only left is this British American tobacco. But most other sectors, there should be a few players for you, or few companies for you to choose from. Okay, so I hope I answered the question by Sam.
Okay, Yo Tian Nun, I already unmute you, so you just need to click the button, then you can talk already.
Yo, right?
Good evening, Mr. David.
Hi, good evening, Yo.
Yeah, just like your outlook and comment on 5G within Malaysia soon.
In Malaysia. So are you talking about the asset owners, or are you talking about the integrators?
Application.
You mean business case, use case?
Yeah. So in relation to our Malaysian telco companies, so that
Well,
means yeah.
unfortunately, this is my personal opinion, and based on my personal experience being a telco engineer, right? Before I became a full-time investor, I was looking for one of the largest telco in Malaysia. Unfortunately for Malaysia, I think the competitiveness of our telco industry has reached its peak or saturation level. And it's not telco's fault. A lot of it is how the policies are being enacted or being enforced by the regulators in the country. I wish that I could give you a better, a more positive answer, but I feel that right now, in fact, telcos in Malaysia as well as other telcos around the world are at the risk of becoming a dumb pipe. Now, what I mean by dumb pipe is especially with the coming of 4G and 5G in the future, right? This thing called the OTT. I'm not sure if you know what is OTT. OTT stands for all over the top applications like WhatsApp, your Facebook, right? All these apps that are seemingly free, right? We don't really need to get services, or we don't buy the services from telcos anymore. What the telco is good for is really provide the bandwidth as well as coverage, as accessibility to the internet for us. All right. How they can differentiate from each other, in my opinion, based on what I've seen in the developed markets like US and Singapore, right, is in content. So I believe that if you want to focus, if you want to invest in telco in Malaysia, although this is not directly related to 5G, right? Look for telcos that are innovative, especially in their product content offering. Meaning, do they bundle any type of services that you can get outside? Like, for example, bundled with Netflix, bundled by or any other services. All right, I think that will be the game changer. Right, Yo?
Okay, thank you very much. Thank you.
Oh, by the way, other than that, you can also look at infrastructure players, especially like these fiber optics like Timecom. Timecom is a great company. Disclaimer: I'm a shareholder of Timecom. Jeff, you want me to go through the questions?
Yeah, I think
Just
Sam
now,
also have another question.
do you enter when it dropped to support, or after QR report, or you just enter the next day? Wow,
That's
this is
very short.
this is a very subjective question, because there is no one answer, Sam, to tell the truth. But I can give you a rule of thumb. Try not to trade by speculating on the quarterly results. There is this thing called the quarterly QR bomb. I'm not sure if you are familiar with it, because I think you experience this. Normally before the results are released, there'll be a lot of noise on the ground. Am I right, Sam? Especially these days with Telegram, so many channels, right? There'll be a lot of noise, a lot of rumors floating around. Oh, this company will report how many percent quarter on quarter growth or year on year growth, right? But chances are, when you have received this news, right, I can guarantee you, a hundred or thousands other more participants have also received, or in fact, some has gotten the news way further. So it may become a self realizing prophecy where the stock price will go up because people start to chase. Then when when the results are out, even though they may report very fantastic result, right? Sometimes you feel that, how come the share price come down, right? And this is, a very typical market phenomenon, or what we call buy on rumor, sell on news, right? But as a rule of thumb, if you're investing for the long term, I would not. I would ask you. I would request you to reconsider before doing this. Sometimes you may make a lot. You may be successful in these trades. But even though you may think that, the company released a very good result, share price shoot up, right? You may feel that, I missed an opportunity. Don't worry. trust me, there'll come a point sometime in the future, right? Because the market is so versatile, you know, and so many news circulating around that may cause the price to correct, right? I'm very sure that in sometime in the future, right, you have opportunity to buy the stock. Sometimes even at cheaper price than when they have released their quarterly result, right? So I would seriously, honestly ask you to reconsider if you want to trade based on quarterly results rumors. Okay.
Okay,
Now,
next question from
Mr. Oyong, my friend.
Yeah.
Mm.
Between battery technology and hydrogen fuel cell, which technology would prevail in the future?
Well, this is a million-dollar question, isn't it? In any technology or in any new technology, right? Whether it's telecommunications or battery tech or electric vehicles, right? There are bound to be more than one leaders. Okay. To answer this question on a more generic or more top-down scale, right? Look at where most of the capex flowing to. If more money is flowing into battery technology, then that's where you should look at. If more money is flowing into a hydrogen fuel cell, then that should be that is likely the technology that will prevail. Now, this is very different from the question of which is the better technology. All right, don't forget, you can have the best technology in the world, but it is not commercially viable. It doesn't make sense as well. What we're looking for is a technology that works and that can be commercialized on a large scale, which can be scaled up easily. Okay. Now, hydrogen fuel cell compared to battery technology has its pros and cons, but based on our own research, based on our own understanding, right, there are very few markets or very few brand owners that has actually spent a lot of capex or R&D into the hydrogen. On the other hand, we do see that a lot of focus is being put on the battery technology. So personally, this is my own personal opinion. All right, I will be putting my money more on battery technology rather than hydrogen fuel cell. Okay, I could be wrong. Don't quote me for it, but this is based on my own understanding. Okay, so shall we move on, Jeff, to the next question?
Yep. Chai. Yeah. A lot of people talk about ESG now. Is it a necessity for your selection?
It is not just a necessity, it is absolute necessity that you have to incorporate ESG as a consideration in your stock picks. Case in point, right? I'm sure you have heard of ATA IMS recently, right? Now, truth be told, ATA IMS is not a bad company. In fact, what I heard is they are one of the earlier manufacturers that are responsible to bring Dyson into Malaysia last time, long time ago. And the numbers are great. And, the numbers are quite solid. They had been one of the Dyson's preferred vendors for many years, based on the management's disclosure last time. But because of ESG, right, you can see what ESG has done to the glove manufacturers in Malaysia, right? From 80 billion market cap to what it's looking at today, right? So you can see that ESG is no joke. Especially now, a lot of funds, why I say that is because a lot of funds, especially foreign funds, ESG is actually a major part of the selection criteria. So when a company or a stock that in their portfolio breaches certain ESG criteria, they may have no choice but to divest that particular allocation or that particular stock, regardless of whether it's profitable or not. So that is beside the point already. So not just gloves, other than gloves or even this EMS, right? Look at Tenaga. Tenaga is a monopoly of this our electricity utility company in Malaysia. But how come the share price did not perform, right? Even though with more and more industries coming up, right, especially post-pandemic, right? Why is it not? And with the coal price at the all-time low before the pandemic, right? Why has Tenaga not really performed in terms of share price? I can tell it's really because of ESG. So ESG is becoming more and more important. We need to consider this in our selection criteria. Good question, Chai.
Okay, another one from Victor. If we have a few retirement goal, should we create few portfolio or focus on one portfolio?
Well, really, I would throw the question back at you, Victor. Depends on how much time you have. So if you are fully employed, you may not have the luxury to manage a few portfolios. Maybe if that's your case, maybe one or two portfolios would do. But if you're a full-time investor like myself, you can have a few because some portfolios may serve different objectives, right? So that is more practical. For myself, I have about a few portfolios. I have one for my own retirement and for my wife. I have one for my children's education. I have another one for play money, so on and so forth. Yeah.
Okay, next for Maran. Can you name some of the company that related to EV in Malaysia?
Related to EV, hey Jeff, I'm not licensed to give stock picks, but I can share what are the some of the names that we are looking at. Is it okay?
Yeah.
Okay. So instead of directly pointing at which companies will benefit directly, right? In terms of semiconductor, I personally like two companies, right? One is this MPI, Malaysian Pacific Industries, and the other is Pentamaster. Now, why I name these two companies, although they are not directly related to EV, but they actually, a lot of the products as well as the services, right, are related to EV, especially in the semiconductor. Now, and in that particular regard, I'm talking about silicon carbide, SiC, right? Silicon carbide is actually more superior than the normal silicon based chips, especially in the power management systems, because they can withstand higher temperature, they can withstand they can operate on higher voltage, and they have a lot of other these physical parameters that make it more superior compared to silicon. Especially for high voltage, especially for this EV application, right? So these are the two companies. Now, other than that, there are also a lot of companies related to the battery production, whether it is in the automation system, whether it's in the packing, so on and so forth. So some of the names at the back of my head will be companies like GreatTech, companies like Genetech, right? Although some of these companies, the share price has really accelerated very, very aggressively this year. So don't forget your timing risk when you are considering to invest in these stocks. Yeah. Okay.
Yeah. For additional audience, please do your own research before decide to invest in any company. Yeah.
Thank you very much for that, Jeff.
So the next question, I think. Oh, that's all for tonight.
You have a very interesting guest. Anyway, thanks for joining us.
All right. I think we have answered most of the questions. Thank you everyone for attending, and thank you again to Ian and David to give your valuable lesson to our audience.
Yeah, thank you, and
Webinar
for having us. Thank you very much.
Yeah, by Investment Bank. So we will end the session now. Thank you everyone. Bye bye and stay safe.